Morning, Steve Free in Chicago with the morning grain news. Well, again, it's USDA report day, and 11 o'clock we'll be a lot smarter than we are right now. This is a critical report for a couple of reasons. Number one, the current demand for U.S. soybean crush and export demand is probably higher than what the USDA forecasted in April. So will the USDA raise those demand numbers and lower the U.S. carryout? Number two is that they'll put out the first U.S. enrolled 21-22 supply and demands. So if they use current acreage, if they use their yield from the Outlook conference, if they plug in demand, they come up with a carryout in beans of 25 and for corn 11.65. And those numbers are just too low. USDA won't say that this early in the crop growing season. So they're either going to have to adjust the yield, or they're going to have to adjust demand to come up with some kind of carryout beans around 120, maybe 1,300 in the corn. We don't expect a lot of big changes in the wheat, although the 21-22 U.S. wheat carryout could be as low as 710 to 715. As far as weather is concerned, the maps are in pretty agreement over the next couple of weeks that there'll be some shower activities across parts of the southern U.S., but no rain for the northern plains or Canadian prairies, or even the northwest corn belt. And if we walk in here Monday and that forecast continues into early June, then I think that's going to be positive to the market. You know, for the price structure of the marketplace, July beans are already trading over $16, which is a price that many thought we'd be trading at the end of June prior to any weather trade. We've got July corn over $7 and all the wheats also over $7. So what is next? I mean, is it $18 beans, which would mean we would have something around $9 corn, $8, $9 corn, $9 wheat, just because our U.S. old crop supply is tight and China keeps buying new crop U.S. corn. We'll also get our first look at the USDA's guess for China 21-22 corn and soybean imports. There's no indication that those imports will be down. In fact, there's indication those imports will be up. So if they lower the Brazil crop to where the trade is trading, it would add somewhere between 4 and 500 million bushels to next year's U.S. corn exports. On top of that, once the country is vaccinated and back traveling, we would look for an increase in fuel demand and also an increase in ethanol demand. So all these factors are bullish to prices, even without trading the weather forecast. And there are some long-range weather forecasters that suggest U.S. late spring and early summer could see a drier trend and a warmer trend for the Northwest, Midwest, and also the Northern Plains and the Canadian prairies. Recent rains have improved crops in Europe and the Black Sea. It's still dry in Brazil. It's still okay in Argentina. So I guess the main thing right now is to get through these numbers, and then we'll see what Mother Nature has for us. And the managed funds have a record long position for this time of year in corn, oilseeds, and wheat. As always, these are my thoughts, not those of ADM or ADM Investor Services. I'll be back at 11 o'clock with an update on the USDA numbers. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.